So even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that. So I think it's longer than people imagine. So it's later in the year. Because people are so scarred by last time around again. And if I look at it on a probabilistic basis, when we took off so aggressively in 2023, I'm like, okay, look, there is a chance that we front load the cycle. But then we had a 8-month correction, and that kind of put it back on track. And so therefore, I think we've got two odds now is, does this look like a more normal cycle? What that means, I don't even know anymore, but let's say 250,000 Bitcoin. Or do we get something like 2017 and 2013, which is something a bit wilder? And I think the probability has gone up for me of that. But, I don't make predictions on this stuff because it's pointless and you just get trolled on the internet for making predictions. But probabilistically speaking, from what I know today and what I know about liquidity and the regulations and everything else, the probability is that we're going to get a more violent upside cycle with lots of volatility in the middle. Like, liquidity has been falling for 2 months now, 3 months. It's fallen quite sharply. And that's whether you use Global M2 or whether you use our Global Liquidity Index, total liquidity, that we produce at Global Macro Investor. It matched really well on Bitcoin. Now, these correlations don't last forever in a perfect form, but it's been perfect. And it would suggest that the market peaks sometime December, end of the year, early Jan, and sharply corrects, which is exactly what happened last time Trump came in. When Trump got voted in, the dollar screamed higher, rates went higher. He actually came in, rates went lower, the dollar went lower, but that run-up over the Trump getting voted in 2016 caused a 35% correction in January of 2017. In the end, it was all noise. But, we're going to get to that. We're going to get to very frothy. Some people are worried it's happening now as we speak. Maybe. Doesn't look like it according to my work. It would suggest later. But, who the hell knows? But we'll get one of those to come. Then we'll have the post-US tax season version as well, because in the end, people are going to have a lot of gains, and if they've switched anything around, they're going to have to pay the tax man a lot of money, and they have to sell stuff to realize profits. And that's that kind of sell in May and go away idea that generally works. It's tax season. Don't lose control of your tokens. And any leverage in some larger drawdown means that you end up getting taken away and your coins don't belong to you anymore, and then you're out of the game. And if it's going from 3 trillion to 100 trillion, rule number one is don't get out of the game. Or don't get taken out of the game.
PAL's overarching message is one of patience and perseverance. With the crypto market poised to grow from $3 trillion to $100 trillion, he advises investors to prioritize staying in the game. Avoiding leverage and ensuring control over one's assets are paramount, especially during periods of market turbulence. Bitcoin, while likely to lose some dominance as the ecosystem matures, is expected to remain a cornerstone asset. PAL predicts its market cap could rival or exceed gold's, potentially reaching $30 trillion. Meanwhile, other segments of the crypto market will offer substantial opportunities, particularly for early-stage projects in their growth phases.